Hello there, folks. Welcome into today's video. It's a buy one, get two free in this one. First one up here is this 1 minute clip. Kramer says, do not buy Coinbase right now. Want to hear what he has to say and give my perspective on Coinbase stock in this one, okay? Second video to react to. The stock market's going to rally in the second half of 2023. We're going to listen to what this gentleman has to say, a bit of an argument here, let's call it that, more than a debate. And so we'll hear what these gentlemen have to say about this subject. And the last video I want to react to is Amazon stock and what this individual is basically saying about Amazon stock, what's going on with the pricing around it. Amazon is the main stock I am focused on buying this year in 2023 in terms of the big cap stocks. Last year was definitely Meta, this year is Amazon. So appreciate everybody joining me as always. If you want to keep track of all the moves I'm making in the market, including the stocks I bought here today, which there was 4 of them, check out my Patreon. That will be the pinned comment down there to get access to see all the moves I'm making in there. And we do also even have a Discord chat in there as well now. So if you're looking to join us in there, that will be a pinned comment. If you're looking to apply to join my private stock group, the private wealth group, that will be in the description area, okay? Alrighty guys, let's get into this.
Time for Kramer's Mad Dash as we count down to the opening bell.
Very interesting and surprising piece of research this morning out of Bank of America, talking about how Coinbase has not picked up any business during this period. And they questioned, they thought that maybe that would be, at this moment, with all the different turmoil, that Coinbase would be the beneficiary. They're saying that Coinbase may be too high, and we remain cautious on coin due to regulatory headwinds, the Wells notice in March, and our view the consensus estimates are too high. Now, they're maintaining underperformance. You say they're just talking their negative book. But I thought the Coinbase would have huge inflows here. I just figured that they were the... To some people, not me, the JP Morgan of the business, and so therefore the money goes to JP Morgan. Well, doesn't look like it.
Yeah. The other puzzle is why, I guess some argue, Bitcoin is held up, relatively speaking, given what would be obvious drains in liquidity. Yep.
I know. Well, there was another time when I would have said that it's just manipulated higher. These days, I just find the behavior very quizzical.
Yeah. You think
I would not touch this thing at all.
How... Kramer, okay, let's just use our brains a little bit, okay? I have money locked up on Voyager. I have money locked up on FTX. How am I going to get my money to move it to Coinbase? You can't do that, dude. Like, what are you talking about here? Because the other guys have gone down, and Celsius and all the other crypto companies that went down over the past year, right? Everybody that has money on those, their money's stuck there. It's not like we can be like, oh, FTX went under, oh, Voyager went under. Let's pull our Bitcoin out in Ethereum and put it over here to Coinbase. No, of course we'd all do that if we could get access to it. But guess what? We can't. Use your brain a little bit, dude. I'm like, it's shocking to me. And it's not just him, it's that analyst. It's like, guys, think about this for a moment. Just think about it for a moment. I mean, my gosh, of course we would all love to move our money either off exchanges or to a Coinbase if we could get access to it. But none of us can get access to it, okay? I know so many people that are close to me and had significant sums of money, either on Voyager, FTX, Celsius, all different places. And none of them have access to their money so they can go move it to a Coinbase. It's not the way it works, man. And so that's just like a laughable thing, okay? In terms of long term, Coinbase is a huge beneficiary because when you talk about next fresh money out there, people don't have many options now at this point in time, right? There's Binance as an option, but let's be honest, there's a lot of questions about Binance and if they're the next FTX. A lot of questions about that, right? So when you look out there, it's like you could put it on Robinhood, I guess. Robinhood has a few different, let's call it cryptos. Or you could move it to Coinbase, which is actually known for being a crypto provider. So if anything, I think long-term, Coinbase is a massive beneficiary of everything that went down. But like, it's a laughable thing to be like, well, all these ones went under and no one's moving their money. It's like, dude, we can't get to our money. Like, how hard is that to understand? Oh gosh, man, if people just thought a little more, like just... Okay. Calm down now, okay? Next one up here, why the stock market is going to rally in the second half. Let's hear this argument. And I can tell you, as somebody that's watched this clip now, it's an argument.
Halftime headliner today, Brian Belsky of BMO, who makes the argument, interestingly, and maybe not that interesting, because you have gone against the crowd for the better part of the last 18 months and sometimes, frankly, at your peril, which you have admitted on this program. But you suggest you want to buy the dip in financials. Why?
Good afternoon, Scott. Thanks for mentioning that. Money is made when there's blood in the streets. I'm not saying that there's blood in the streets in financials, but we need to take 2 steps back and, number 1, apply some common sense. Number 2, apply some analysis. And number 3, kind of look at things longer term. So let's look at the common sense side of things. I think the market's throwing the baby out with the bathwater with all these financials, and they're not treating all financials equally. And what we think is going to end up happening from a thematic basis and strategically are 3 things. Number 1, the inverse of what happened post the great financial crisis, where small and medium banks were the really things to be, and everyone shunned the big banks. I think it's pretty clear that big money center banks and Canadian banks are going to be the big winners in this as investors, whether or not you're a private client investor, a commercial real estate investor, or an institutional investor.
So, yes, but there's a big problem here, okay, with the big banks, okay? Big problem with the big banks, and I think this is going to be seen more over this next few quarters, okay? When it comes to these big dog banks, they haven't been upping their CD amounts in any significant way, savings amounts, anything like that. Meanwhile, the more competitive, smaller banks have been doing that. And so what I believe is going to happen is, and this is even something I personally did recently, I moved a bunch of money off of Chase and into another provider for a savings account that yields me, let's call it close to 4%. Because gosh, you know what? I'd rather make 4% on that money I got sitting around than have it with Chase where I get nothing. I mean, pretty much absolutely nothing, okay? And so I think that a lot of people are going to, when interest rates were nothing, you couldn't make anything on a savings account, CD accounts, anything like that, right? People had no problem keeping their money at Wells Fargo, JP Morgan, and Bank of America and getting nothing. And they didn't even think about it. But now people are waking up and realizing, oh my gosh, like I can get savings accounts at 3-4%, CD accounts 3-4%, treasuries at 4-5%. Gosh, maybe I should go get some easy money that's FDIC insured. I'm going to go ahead and take that opportunity, right? And so these big guys, they're going to either need to up what they're offering out there, or they need rates to basically be in a massive downdraft so no one considers that. I mean, because think about it. If you could only get 1% on a savings account by moving your money somewhere else, and you get 0% at Chase or Bank of America, a lot of people say it's not even worth it. I'll just keep my money in there. But when it's 4%, whole different scenario, okay? So I think that's an important factor that we got to consider in regards to this.
We're going to go to the big banks where the balance sheets and the stabilities are. That's kind of number 1 thing. Number 2 theme is that because of the issues in the small mid banks, I think they're going to see massive consolidation. And number 3, with respect to going forward in regulation, I think there's going to be pointed regulation toward the small and mid banks. From a fundamental perspective, Tier 1 capital ratios are 400 basis points above where we were in the great financial crisis. Loan to deposit ratios are very steady. Held to maturity securities are very, very pointed in those banks that were the bad behavior banks. We're seeing no systemic risk, but the financials at 14% of the market, we believe would be a strong overweight here and propose a great value at these levels. You don't have to own them all, Scott. You have to be very select. And from our work with rising dispersion and rising earnings growth dispersion across the market, but especially on a sector level, you absolutely positively have to be a stock picker.
But I feel like, you're in Mike Mayo camp of, as you look at bank to bank, that in his words, as he puts it, Goliath is winning. I just feel like even so, that may be the case. But after SVB and what's happened with regional banks and how some of credit may be changing, that Goliath is getting hit with more stones than we otherwise originally thought.
Well, I don't necessarily agree with that, Scott, because, again, this is about stock picking. And I think we in the investment community, frankly, have gotten lazy by just buying ETFs or being broader on the market. That's why you have to roll up your sleeves and do individual.
Hey, he's preaching. Preach to the choir, sir. Preaching to the choir. Thank you.
Work on some of these banks. Like, for instance, in the small mid-cap portfolio, we own Glacier Bank and First Citizen. These are banks that have massively,
Did you know the Russell 2000 hasn't gone anywhere since September of 2018? Nowhere. Imagine if that happened with S&P 500 over the next several years, right? And the index just goes nowhere. I can tell you there's going to be some stocks that perform amazing in that environment, despite even if an index wasn't to go anywhere, right? A lot of folks had it real good for a long time and putting in no work, no effort. Let's just put it in an index fund, right? You know, I don't think those things last forever. Let's just call it that.
Management teams, very clean balance sheets, very clean loan portfolios, and unfortunately, you have to kind of sift through the rubble to find those big names, or the best names, I'm sorry. In the big cap banks, Mr. Moynihan and Mr. Diamond set the stage when they talked about fourth quarter earnings and 2023 earnings early in January, where they started this mantra of under promise and over deliver. In Mr. Diamond's letter, that everybody wants to talk about this week, only accentuated that. And oh, by the way, he said, oh, maybe not, things are so bad. But so that's why you want to be more concentrated with respect to your holdings, maintain that overweight, let everybody be bearish. If you look at our fund flow chart that we put in our report today, everyone and their mother, brother, sister, cousin, uncles chasing utilities, we'd say good luck with that. Same thing on the staple side, they're expensive. You want to look at where people are not. You want to always want to skate to where the puck is going, Scott. Yeah, and where the puck is going is these areas.
If the puck is going to a softer portion of the ice because the economy is obviously weakening by virtue of the data, do you really want to skate there at the risk of falling through?
Yes, I do. Because remember, stocks lead earnings, which lead the economy. The stock market, if and when we see the softness in the economy, Scott, the Fed's going to cut rates. Karen was amazing when she talked about, and Bryn talked about the Fed's going to be late. Everybody knows the Fed's going to be late. The Fed's going to overshoot. We know that. Scott, what's the market going to do if and when the Fed cuts rates? Come on. We're not in a period where we're going back to zero interest rates anytime soon. Joe talks about disinflation. You have disinflation, yeah, from the medium banks, but you also have disinflation from the growth aspects of the market, which would be technology. The market's going to rally the second half of the year. To be talking about the market peaking in the first quarter makes no sense. Are we going to be choppy here?
What if we're in a...
Oh, why didn't they let that play out? Okay. Things got nasty after that, okay? You already saw it kind of building up. It started out real peaceful, but man, then they started arguing hardcore. Nonetheless, rally in the back half of the year. Possible if we don't have the economy completely fall off the rails. If we have the economy fall off the rails, it's a whole different situation. If we can see a situation where inflation continues to come down, right? Maybe the Fed starts to cut in the back half of this year, maybe late summertime, early fall time, something like that, right? You continue to see some job losses, but it's not like overwhelming, like, oh my gosh, it's 08 again, right? Then you could talk about definitely a rally in the back half of the year, especially if you're talking about strengthening earnings from a lot of companies, right? Because a lot of companies are doing cuts, reorganizing their businesses right now. Huge one-time expenses, huge one-time costs with that. If they can get past that and move forward, then we can talk about a rallying, let's call it back half of this year for the market in general. Amazing on. Let's get into Amazon. Amazon might have been one of the many stocks I bought here today.
Jessica Inskip, Director of Product over at Options Play. Jessica, there are a lot of folks out there who hope that you're right because those mega cap technology names are so important to this market. Why the bull case for the NASDAQ?
Absolutely. And it's all from a technical perspective, which of course could be driven by fundamentals, but the market's fueled by tech. It leads the rallies, the bear market rallies, the declines, and consistently when the market's running on E gets that refill around earnings from tech. So NDX has it's stuck really between two key milestones. One is the January 30th high of 12,880. I want to see that overcome, which is now its old resistance and support. So we've seen that tested today. NDX is really validating that support. Next, the second milestone is the late gap in August that was formed from 13,175 to 13,210. We need to see that overcome in order to have more of a bullish case. So right now I see it stuck in between those two key bull milestones and kind of range bound until we can break above that 13,175, we'll call it 13,200 level. And more importantly, when I look at a broader picture of a chart, is I look for the trading cycle. Is there a bullish base forming? Where is the trend? And NDX has consistent closes above the 26 and the 40 weekly moving averages. So I look, where is the security above and below those averages in addition to the slope of that line? And as prices are increasing, we see an upward slope. So that tells me that there's a bullish base forming, which really validates a larger view that we support this level where we're at right now and have continuous momentum to go upwards, which of course is focusing on earnings.
All right. So Jessica, that begs the question. That's the index level. There have to be stocks with good patterns and bullish patterns forming that are going to drive some of that index performance. What's the most compelling bull case to you in that NASDAQ 100 trade?
So the bull I want to pull is Microsoft. Microsoft, that AI is certainly all of the frenzy and overhype, but let's look at it from a technical perspective. There are a really big bullish milestone ahead. Their trading cycle is absolutely bullish. We've got that milestone of 292, which is the mid-August lower high. If we overcome that, then we can go to about a little above 300, about 312. And what's important is that gap that we just talked about with NDX that it needs to fill in order to have more of a bullish base case. Microsoft is one step ahead and already filled that gap. And now we're on to the next milestone, which would be a March 2022 high, which is insane to absolutely even think about right now within this current environment. And the trading cycle, of course, just like we were looking at with NASDAQ and all the charts, consistent close.
Microsoft stock's been getting a lot of hate. I was watching Fast Money earlier. They were hating on Microsoft and, it's a 27 PE ratio right now and all these sorts of things. Okay, here's the deal with Microsoft, right? Super stable business model, regardless, economy great, good, bad, whatever, okay? They're going to continue to put up their numbers. Not only that, now they got that major investment in ChatGPT, which has been going crazy. Don't be surprised if ChatGPT's valuation increases exponentially over the next several years, right? Which means Microsoft's going to take gains on that over the next several years if that's the situation, which obviously is very impactful to Microsoft, right? And so I think those are just things to consider here. It's like, why shouldn't Microsoft, if they're one of the most basic needs companies in the software space, if not the most, why shouldn't they command a 30 PE? You know what I mean? When you think about it from that context, never mind this ChatGPT and having such a major ownership stake in, arguably the hottest thing in tech, right? At least right now. We don't know if it will be in 3 years from now, but it is right now. That's pretty meaningful.
Above the 26 and 40 tell me that quarter over quarter we have an increase in prices. So
let's be honest, you can't invest in ChatGPT, but you can if you buy Microsoft stock. You're basically indirectly owning ChatGPT. And so I believe that's also another thing that people are looking at is I'm buying Microsoft, but I'm also buying ChatGPT, right? So that's something to think about.
That supports a solid base and a bull case, giving us bullish momentum.
All right, so there's the bullish momentum, and it's a big factor. It's one of the biggest companies out there and the biggest weighting. Let's talk about where there is the flagging element, where there could be a big drag. What are the charts showing for the kind of bear case, or what stocks are going to have the most in terms of headwinds?
And that's from looking at Amazon, which technically falls under consumer discretionary. There is another significant resistance ahead, but their trading cycle is actually an immediate near-term bearish, which tells me that it doesn't have the momentum that it needs to get to that trading cycle. If you take a look at the chart, we look at the, again, 26 and 40 week. Now you see that this is a step behind the NDX. We've closed above the 26 weekly moving average, which now becomes our support level, but we're having difficulty going above the 40 weekly. So I'm looking for consistent closes above that in addition to price increase to have a bullish case. This absolutely has the inverse. So as I see the downward slope, I suspect that Amazon has some short-term momentum to get to that 106 40 weekly moving average before it retracts down and will probably race to support around 96, which is the 26 weekly. And that could even trigger the earlier lows around 88. Now, what I think is really interesting is a different type of chart is we've been talking about absolute charts. Relative charts will give me a more early indication. So how is the security performing versus the broader market or perhaps even its sector? In this case, we look at Amazon versus the S&P 500. You see this clear downwards trend line, which supports there's there's some movement to go up to that trend line, but we have not even come close to even surpassing that. So that tells me and supports that case of we'll probably have some near-term momentum to that 106 level and then retrace and race back down.
Yeah. Jessica sold me. I'm officially a technical trader for now. In all seriousness, I hope she doesn't start a YouTube channel, because if she does, I'm in trouble, man. That's all I got to say about that. So my thoughts on Amazon. I think in terms of the fundamental case around Amazon, right? We all know what the fundamental case is. People are scared to get into Amazon stock. Like, why is that stock not rallying hard, like, let's say, Apple or Microsoft or some of these other stocks, Meta, for instance, right? There's still a worry about from two sides. Here's the issue with Amazon. We know Amazon has a lot of different businesses, but let's be honest, they have two real big businesses. One is their e-commerce business, right? In that, there's still worries about the consumer, recession, all that. So that's where the worries come in about the e-commerce business. The second big worry for Amazon is AWS, Amazon Web Services, and businesses pulling back on their spend with AWS. And AWS is actually helping businesses cut their spend right now, right? Which is obviously a short-term negative for the company. And so I think that's something that's holding back this stock short-term, which I love, to be quite honest. I absolutely love that. As somebody that wants to buy the stock this entire year, I've been hoping that Amazon stays around $100, anywhere between $80 and $110. That's my hope for this year. If it can be in that range this entire year, which is definitely a possibility, I'll be a very happy camper, because I will have built my position fully by the end of the year that I want to have in Amazon to hold for the next, I don't know, probably 5 years, 7 years, 10 years. Like, it's like once I build out this position fully in Amazon, which right now I think I have 70-something thousand dollars in Amazon. I'd love to get it to 100K or multi-100K position. Like, I don't even know when I would sell Amazon, to be honest, but it would have to be like years from now for me to even consider selling out of that stock. So appreciate you guys joining me. As always, 25,200 plus subscribers on this channel. Thank you every single person that's subscribed. I appreciate y'all. Thank you everybody that supports on Patreon. That's the pinned comment down there. If you want to join us in there, see the moves I made today. It was 4 of them in total. Much love as always, and have a great day.